the company has mentioned that that has been successful for them, particularly in Europe. In the US, I think it's also been relatively successful, but profitability, I think, took a lot longer to actually be achieved in the US, though it now seems to be in a good position. So both of those regions, we feel should actually continue to do relatively well, and that the strategy seems well tailored to the markets. The question mark, though, is that part of the reason for the big improvement we feel is just some small improvements in terms of an FX tailwind, as well as noticeable bounce back or increases in per store sales. That does seem to be tapering, at least from the data as we look at it. And so the question is whether the company can continue to drive growth aggressively just with pure store openings. Because as you noted, for fast retailing, about 40% of their revenues from Uniqlo Japan, about 30% is from Asia. And then there's about 15% from Europe and the US and 15% from GU and their global flagship brands. So the size of the businesses is arguably not large enough to be able to offset any sort of weakness in China as well as to an extent in Asia, unless they have very aggressive store openings. And Japan, as we know, the top line growth is not going to be particularly exceptional, although their margins in the third quarter were very aggressive. As far as we're aware, this is the first time that third quarter profits were actually higher than first quarter profits for Uniqlo Japan, which has quite strong seasonality. So if Japan can continue to boost margins, then potentially there is a positive story there. But that, again, is a bit of a question mark because it seems that a lot of their product lineup just did extremely well this quarter.
I wanted to also just ask about, I suppose, maybe the geopolitical angle here, because Uniqlo, and this is my reading, hasn't been so much affected by some of the geopolitical tensions between Japan and China, like what we saw, for example, with Shiseido off the back of the water waste Fukushima discharge, for example. Do you see that as a potential longer-term headwind for the company, given, of course, we're seeing just more headlines coming through in terms of some of those tensions in the East China Sea, around Taiwan, in relation to security off the back of NATO?
I think that it's certainly plausible that there could be some problems cropping up due to the political nature, but this affects all Japanese companies, and at least from our perspective, fast retailing is probably one of the less affected companies simply because in the past they've been much more careful to try and trot a very neutral line. In the end, I think even they tend to eventually side with the US if there is significant conflict, but they do kind of try to hold the line as long as possible. Whereas if you look at a lot of other companies, they do tend to lean much more heavily towards the sort of US, Japan, Western alliance in terms of their actions on the political front. So we'd assume that fast retailing would probably be one of the last companies to actually be targeted in any sort of situation like that.